Good evening, everybody. It's Blair Nightingale here, 6 p.m. It's time for Market Monday, and we are going to get to do a market update this week. We do this, I would say, every month at least, maybe every 5-6 weeks sometimes. I want to just go back, check in, actually look at the market, give you an idea of what's going on. Something we do actually with our students in the programs every single day, looking at what's going on in the market. I want to give you some ideas on where we just came through, even just this last week, and where we're going from here, some things to watch out for. Seems like, right now we're in a bear market, and bear markets are very news driven and volatile, right? We always consider the news to a degree when we're trading. It's not just the chart. But that said, there are times when the news is not as consequential, right? The risk factor from the news is not as high. And then there are times when it is. And this is one of those times where the news is really factoring in pretty heavily. So I want to give you some of those things. We're going to head over to the S&P chart. I'm going to show you a few charts actually today of things that are doing a lot of activity. We'll put it that way for now, but we'll jump on over to those, and then I'll give you a little bit of an update on what I'm expecting coming up this week. Of course, for our friends out there, anybody who is joining us, you've been here before, you're brand new, you're on Facebook, you're on YouTube, wherever you are, go ahead and drop a comment in the comment box. Let us know who you are, where you're from, and if you have any questions as we're going along. Of course, I love that. Last week, we had a very vibrant conversation going on Market Monday, and that's what I love. That's my favorite. That's really what I would love to see this time be about every time, more so because it is for me to hear from you guys and know exactly what it is that you're looking at, what you're wondering, where you're at in your trading journey and your learning journey. I love to speak directly to that. Now, that said, I've got lots of great stuff for us to get into tonight. So I'm going to go ahead and start and do that. And if you've got something that you want to pop in that comment there, like this guy right here, joining us from PA, right? Or even switch it on over. Benjamin is with us. Then you can do that as well. Thank you guys both for commenting and joining in. For everybody else who's here, of course, our friends who are joining on the recording are with us as well. Biggest week in the markets, biggest increase week over week since 1976, right? 1976. Let's go ahead, pop the chart up there real quick. We're going to look at a bunch of stuff here, but if I head on over to the Dow Jones, that's a solid bounce. Now, obviously, this whole run here isn't just from this week, right? We've got more trading sessions from right there than just a week. 32,861, right, is where it closed at. But I'm down here with this crosshair at 28. Let's call it 28,700, right? So that's a big move. Now, bear markets have big moves. So things have been moving pretty significantly, and that doesn't mean we're not actually still in a bear market, right? We're still in a bear market. We're still expecting an even deeper economic recession. And it was only just last week, right, where a lot of, I'm going to say the big money, billionaires, investment banks, hedge funds, more and more voices are coming forth and saying we're anticipating a pretty, I'm not even going to say pretty significant. Some of them vary in their opinion on the depth, but definitely seeing a heavier recession in the coming year than where we are right now. Inflation, once it gets in the system, it's not so easy to flush it out, right? It does not happen that quickly. You have to be aggressive with it, and you have to give it time. Even some of those who are on the Fed, which actually is another thing we're going to talk about. The Fed is meeting this week. Their meeting will start tomorrow, conclude on Wednesday. And that's important for traders to know. Anytime that the Fed is releasing a statement or making policy announcements, we want to know that. That's coming up. I'll talk about that in a minute. But even some of those who are on the Fed have been saying, listen, It takes a while for this to work itself through. So what's happening? Well, we're seeing the market get pressed down as they attempt to cool the economy, but that doesn't mean Wall Street doesn't want to buy stocks. And when there's a reason to buy stocks, it can mean some pretty ferocious bounces in the indexes and then obviously on stocks. We saw some fairly weak tech earnings this week, last week in particular. If I head on over to say, let's look at Google, I can't click it like that. Let me do it like this, right? We see Google took a nice spill, trying to recover a little bit here, but definitely, obviously going from 105 down closer to 90. This is kind of amazing. You look at another company like this, also missed on earnings. Here's Amazon. If I zoom this out, you guys, let's just keep an idea of where we are. All right, here's the double top of the highs. It made the high, right? It came and made the high again. So we're sitting at about 190 bucks. I'm rounding up just slightly, right? 190 right there. We're slightly below that, but $190. And if I zoom back into this gap, right, that's right down here. I'm going to scroll up a little right there. Yeah, $97, $98. Okay. So 190 down to less than 100, right? That's a huge move down over time for a company like Amazon. So stocks, especially in the tech space in particular, right? It's not that all sectors, but especially in the tech space, we're seeing a lot of these companies, they're way down. Now, the thing is that as inflation continues to run wild and the Fed continues to need to be more aggressive, thus the Fed meeting this week expecting another 0.75 raise of the rates, right? I've been reading articles on the real estate markets, right? A lot of opportunity comes to those who are prepared in recessions, right? I meet people every weekend all around the country, and I see the collective jaws drop when they hear that the way a trader thinks through a bear market and a recession is completely opposite to how most people in the public respond, right? Now, many of you guys out there have heard this before, but it bears repeating that traders are simply looking to take opportunity out of whatever is happening in the markets. And when the markets move down, I used to tell our students this all the time. Remember that when markets move down, that's resetting prices, right? You can't get back to support if you don't see moves downward. Now, obviously, in a bear market, we're seeing more significant moves downward. If I go over to the SPY, right? This is the S&P index here. Let me zoom in. Notice this here. We've got patterns like this. We're talking months here, right? Look at this trend: up, down, up, down, up, down, and then it reverses. And now it's reversing again. I'm going to look at that a little closer in a moment, but here's what I want you to see for right now. I'm going to grab a line here, and I'm just going to pull it across those tops, right along that 200-day moving average, right? So I'm going to see moves. I'm going to see bounces. I'm going to see volatility. But look at that longer term trend. That's really what we've been seeing since the beginning, right here. This is January 22, and that's when we started moving down. So we've still got a longer term downtrend. That's really a major line that I'm looking at, technically speaking, when we're talking about the bear market as a whole. That's what's happening technically. Economically, I'm looking for interest rates to hold, right? When is a Fed meeting going to come and pass where the rates are not raised at all? Now, Wall Street might get excited having seen a 0.75 hike pretty consistently now if the Fed chooses to raise rates by, say, 0.25, right? We might see a pretty significant move in the indexes if that's the case. But really, for me, until that goes back to flat and they're able to hold those for a while, and we're starting to see that actually impact the CPI reports that we get, which is inflation, then I'm not going to be overly bullish on this market. But that doesn't mean we're not going to have bullish moves, right? And for stock traders who've been trying to figure out how am I going to navigate this volatility, what we really need to do is go back to the basics of patterns and say, okay, I know I'm going to see some pretty big moves in the S&P because again, in bear markets, it's moving down over time. The economic conditions are worsening, but that doesn't mean investors aren't going to get an appetite at certain times. And if we're really oversold, then that appetite is going to mean some pretty swift moves higher. Thus, why I said we saw some moves in the indexes that we haven't seen in that time frame since 1976, right? And Wall Street, news, they like to print things like that all the time, like, hasn't happened since 1976, but it's still a pretty significant move to say, hey, 8% in the S&P, right? Typically, on average, the S&P will return around 8% a year. Okay, so that's a pretty big move. And we've seen that. That's indicative of the stock market in 2022. When I started watching the stock market in just 2015, a 30-point move on the day was a big move in the S&P, right? And now we're looking at that kind of move in maybe a few minutes at times, right? So it's definitely different. But this is the bigger move. You'll notice, however, look at what we did off resistance here, right? Down, up, down, up, down, up, down, up, down, breakout, pullback, high, pullback, high. So it's trending. And if I go over to the S&P, even though it's been very volatile, let's go even a little bit closer here, right? The market has been using pattern all along. It's just pattern within an overall trend. It's making highs and lows, right? I've talked to the students extensively as when this broke out, what should we wait for on a breakout? Wait for the pullback in to old resistance. Let it act as new support. Boom, it pops up. This day, we break that high, makes a move up. That means we have two lows. If we have two lows, we can draw a line. We come back and see it catches a bounce here, which is really off of these highs. Notice how that horizontal line goes right across the bottoms right here, right? This stuff is called technical analysis. It's not as random as it seems, right? Navigating this day to day is a part of the skill set of trading. But as we look at this here, it's really building trend. Okay, so now what we'd watch for is for this to continue up and then pull back or even move back into this level now, hold as support, show us some follow through, right? Keep that trend going. Or it breaks down, it breaks the trend, and we look for a breakout on the downside. We're just using price to tell us. I tell people all the time on the weekends when I'm with them, we don't have to guess, right? So many people are nervous about the stock market, either because they don't have any education or because they still think it's gambling, that we're guessing and gambling. And that's not what we do when we apply a system that is looking to find better opportunities. It doesn't guarantee that a trade's going to go our way, but it does put us in the best possible position so that we can manage the risk accordingly. This is how traders do what they do, okay? So very significant moves. This also means for my stock traders out there, for some of you guys who aren't trading options, or perhaps you are trading options, you're looking at those call options and some of those bullish strategies, right? This is what we're looking for, is trend, right? We've got to look at these moving averages and consider that each of them can and will be resistance at any particular point in time. So those are levels to be watching for sure, but we're not overcomplicating it to the degree that we're forgetting that the foundation of what we do is based on technical analysis, and we're using patterns because we're swing trading these patterns, right? Most of us are looking at taking shorter positions because of the extreme volatility. Now, I don't mean short positions necessarily, but shorter time frames. Okay. Now, I'm not suggesting day trading in this session either, but I am saying that we're typically looking at pretty quick price swings. So we might be looking at smaller position sizes and shorter trades for that reason, right? Going on here, looking at some of the earnings that came through, you see Meta. Meta has been, they're really doubling down on that metaverse strategy, right? I think a lot of investors for Meta, Facebook, were looking to see them dial that back as they're spending enormous amounts of cash to build that out without it being profitable, at least on that side of things. And that's not where we're at. Now, you may not even notice because it's hidden by this earnings. We're not up here, right? We're down here. So making a new low this week at $93. Look at this for 3 years, trading at almost $400. Let me get the date on that, in the fall of 21. So just over a year ago, trading at almost 400, really 375, just over 380, and now trading at $93, right? Doesn't mean they're necessarily out of the game yet, but clearly investors are not happy with that. We also saw, I'll just show you one more because this was a big one last week. We saw a lot of tech earnings miss. Now, we did see some earnings actually beat. Big gap down on Microsoft. And as I go over and look at the NASDAQ here, you can see it's reflective of that, right? But still, let me go here, still looking at these major tops here, right? That's what I'll still be continuing to watch as I'm looking at long-term activity right there, right? It's still pretty much solid in a downtrend here, guys. If I take that and I move it down to here, I'd have to change it just a little bit right around there. We hit a bottom and up we went, all right? So that's pretty indicative of what's going on there. So again, fundamentally, economically, I'm looking at the Fed. They're going to report this Wednesday afternoon. You can expect volatility on Wednesday afternoon. If the Fed doesn't raise it 3/4 of a point, you can probably expect some pretty bullish move, at least on Wednesday. If they do any more than that, which they're not expected to do, I would say that's going to be some pretty bearish price action. But they're really going to be watching, and this is the intangible. This is the more unknown factor, is what is their commentary? Wall Street is going to watch this every time the Fed talks right now. They are the big news story on the street. What are they going to say about the future? Yes, fine. They're going to raise 3/4 of a point, but are they going to do it again? Are they going to do it again? Are they going to say? Are they going to hint at it? That will be for Wall Street to decide when Jerome Powell gives his statement on Wednesday afternoon. Traders have to understand who the Fed is and at least basically how they work if we're going to navigate some of those news items effectively. Additionally, looking over at energy, if you'll notice, we're not paying the same at the pump as we were in June. All right, so this is indicative of oil companies right here. This is the energy sector of the S&P 500. It's actually the energy ETF, the XLE. We're pretty darn close, right, to that high that we were at of 92.80, 92.90 back in June. But gas prices aren't up as high. If I go over and I look at the USO, right, oil fund, you can see our highs back here around 90 in June, trading at about 71.50 right now. So we haven't returned there, but continuing to be pretty hot on that side. If gas continues to advance, you're going to continue to see pressure on CPI. If you see the pressure on CPI, it's going to put pressure on the Fed. If it puts pressure on the Fed, they're going to raise rates, and the market's going to continue to go down as our economy continues to contract. I've said this many times. One of the things we're not seeing yet is a real drop in consumer confidence and employment, right? We're not seeing unemployment. If we're not going to see unemployment, then for me, that's a little bit of a wild card as to what this recession really looks like. If we start to see that tip over into unemployment levels rising rapidly, then we got ourselves a much different situation on our hands. And I think we can expect some pretty significant declines. That's not on the table right now. What is the Fed. So as traders, we need to know the season. We're going to use the pattern and the price to really make day-to-day decisions, but the season as a whole still remains pretty bearish on that level. Now, what I want to highlight as we close out, let me go to this guy here. I want to actually make sure we don't have any questions. Okay, I don't see any questions out there right now. You know, one of the things that's amazing about the skill set here, it doesn't tell us the future. All right. Anybody who tells you that technical analysis guarantees X, Y, or Z, right, is not telling the truth, right? It just doesn't do that. That's not how it works. But you can get quite good at technical analysis. And the technical analysis can tell you two things, one of two things. All right. I'm going to give them to you right now. One, there is a discernible pattern on this chart that tells me how to structure a trade and how to manage the risk of that trade. Because a pattern, I tell the students, the pattern is going to give you the information you need to decide whether or not it's a good trade. How much am I going to pay, right? How much am I going to risk? Is it positive risk return? Is this a strategy that I can, or what strategy rather is best to use on this particular pattern? Is it going up? Is it going down? Is it going sideways? See, that doesn't require an economics degree. It requires a technical skill set. But that technical skill set is very visual. And I find that very empowering and hopeful for a lot of people who really want to learn to use the stock market, right? To trade the stock market. The pattern, if it's present, will help us do that. And that's what we teach people to do. Well, okay, but what's the second thing? Well, if there is not a discernible pattern, if the chart isn't following reliable, predictable, repeatable, well, then that's the information we need right there. Because if it's not doing that, then I don't want to do anything with it, right? I don't want to be near it as a trader. Right? I want something that gives me reliable, predictable, repeatable. If I'm buying stock, I definitely don't like this chart. Okay. This is in a significant downtrend. But if I go over to say, now I don't know where I put it right there. Well, while I'm not saying this is necessarily at a buy point today, I am looking for trending stocks. Now, finding trending stocks in a downtrending bear market is certainly harder to do, right? There's no doubt about that. But I'm saying the basic principle remains true no matter what the season is. If I'm going to buy stocks, I need to find patterns that are moving up. I need to find it in sectors and industries that are outperforming the indexes. The indexes are down. And I need to go in and use good patterns so that I have entries, exits, and stop outs. If I put $1,000 into a trade, the theoretical risk in the trade is $1,000, right? Because I'm risking that money. I have put that into the market. But traders don't really calculate it that way, because the chance of you going in and buying XLE and it going to zero, which is what it would have to do for you buying the stock to lose all of your money, right, is very unlikely. Okay. Traders calculate that by using the pattern to go, all right, if it breaks the floor of my pattern, if it breaks support, then I'm going to look at stopping it out. And that amount is actually my risk, right? So we really use the pattern to control the risk and the position size that I put in the trade. If I normally put $1,000 in, depending on my account size and the strategy I'm using, I may only put half that in certain trades, right? It totally depends on the individual, the account size, but how confident someone is in that trade, right? I may not want to skip a trade, but I may choose to go a little bit less money in that trade because I'm managing the risk of perhaps a more speculative position or buying stock in a bear market, right? That's a tougher sled, as they say. So these are things that traders can use as tools to help us manage that, and navigate the season, right? So Wednesday afternoon, Powell will give his speech, and you can watch for a pretty, you'll notice when you look at the index on Wednesday afternoon as it's getting to the end of the day, when those comments come out, you'll see some pretty fast volatility. Let that settle out, right? And see where Wall Street really lands near the end of the day, and certainly in the open on Thursday. That will impact the markets for sure. And we definitely want to watch for that. We've got some more earnings. We're still in earnings season. I think for the most part, the bigger tech earnings are behind us, but we're still going to keep seeing some earnings. So that I think will be the secondary conversation on the news side. But we're looking at the S&P trying to make a bigger run higher. I'll actually put this back up on just for a second here and go to this so that you know what I'm talking about on. You can see, I'll zoom in a little more, where we're at on this 100-day moving average, right? So that will be one of the lines to beat as we go through this week. See if we can get above that moving average to see if the continuation of momentum in that index is there, right? After a pretty big day on Friday, little move backwards today, nothing big, right? Nothing big, nothing to worry about. But I'd like to see where we go with that line right there. I appreciate you guys being on here as always. This is our market update. There is a method to the madness, okay? If you've never taken a course with us here at Tradeway, I want to encourage you, head on over to tradeway.com, and you can sign up for our Step 1 Start Your Journey course. And we're going to teach you the technical analysis that I just talked about and what we call our three-legged trading system. So you have the three things you know you need when you're looking at any trade to see if this is a good trade or not. The markets are very liquid. Anybody can open a brokerage account, go out there and buy some stock these days. But go out there with a system that puts the math in your favor. That's what we want to teach you to do. Head on over to tradeway.com and click on the button right on the main screen, and you can join us. Less than $100. You can learn a stock trading system and get a good foundation for you. And that brings us to the end of our time, guys. Appreciate you being on here. We will be back, of course, next Monday, Market Monday. Thank you guys so much. Billy, I see your comment there. Thank you for being on, sir. I see everybody else in the class. Thank you for being here as well. You know I will be back next week with some fresh content for you. If you haven't yet, like us on Facebook, subscribe on YouTube, and we'll let you know when we're doing other content because we got stuff going on all week long, and we'd love to see you guys there. Thanks so much for being on with me,